Hi, I'm Brien Lundin, editor of Gold Newsletter. I'm here at the Vancouver Metals Investor Forum. Going through a lot of companies. There's some companies in my portfolio in Gold Newsletter, and one recent addition that I'm very excited about is Silver Tigre Metals. Glenn Jessome is going to be here to talk to us about that. I'll give you a bit of a preview. I like gold. I think everyone should, but I tell people if you like gold, you have to love silver. Always offers leverage to gold, natural leverage to gold. And if you want leverage on top of leverage, get into the silver juniors. They add another degree of torque to your portfolio, to that whole macro picture. I really like Silver Tigre, added it to our portfolio because it's not only a company that has one great silver deposit, but two, and they happen to lie right above each other. So
That's right.
How convenient, Glenn. Could you have asked for more?
The placement is perfect.
Yeah.
So Brien, thank you.
Start at the top and work your way down.
Absolutely. Thank you for taking the time to converse about Silver Tigre. Yeah, we're very fortunate, and I was listening to the legend Rick Rule this morning.
Yeah.
I think you were in the room, and something really resonated with me that made me kind of look at how our group operates, and we've been in Mexico for 28 years. He said things such as track record, and really narrowing from the 3,000 junior companies out there in the world, the chaff from the wheat, and getting down to that 200 or 300 that are really valuable.
Yeah.
And I started just to think, and we've done that, and I think it's really important. You kind of made me open my eyes to say, we've been in Mexico for 28 years. Our group out of Halifax built 1, 2, 3 silver mines during that period. 2 more we basically developed to the point where they were permitted, sold those to majors, and then went back and sold 2 of the in-production assets to majors, and now we have 2 companies out of Halifax, and we only are in Mexico, that have spent the last decade getting ready and are ready now to make a construction decision in the next quarter or 2 to build the next 2 great silver mines, and we're here to talk about one of them, Silver Tigre. So it's been a great journey, and exciting to be moving from development to production, because I just see a change kind of in the market. I don't know if you've seen it, Brien, where the gap between the producer, especially on the silver side, and the valuation all the way back to the explorer developer is huge. It's a huge, huge gap, and we're going to go through that gap real fast now that we're ready.
Yeah, and we joke about the 2 mines on top of each other, but that's the beauty of it, is that one is an open pit, fairly low capex, easy, quick. You did your best in our talk today to dispel the whole open pit permitting.
We'll talk
in Mexico.
about that. Let's talk about that, Ray. If you
Let's
want to,
talk
Ray,
about
let's
it.
jump
Let's
in.
do
Look,
it.
so we're going to talk. When you say, first of all, and I'll come back to that, Mexico has always been this type of deposit. Big open pit, low capex, generates cash flow, because underground mining in Mexico is really hard, narrow vein silver. So when we say that's what we have, that's what we were looking for, and that's what all of our projects have been. We call it a flowering epithermal. We'll come back to that. But look, track record, we'll talk a little bit more about the project, but we've had a hard go in Mexico. We've been there through 5 presidents, our group, and AMLO was very difficult. I'm not going to say it was impossible.
Yeah.
He was not easy with foreign investors. He was not easy on the mining industry, and he would get up every morning and do his speech at 7 o'clock, which he did every day during his presidency. And for the last 3 years, while I was developing an open pit underground mine, he said he was going to get rid of open pit mining. I knew he never would. Because mining in Mexico does not work without open pits. Yeah. So that was hard, but we raised during his reign, we raised over $100 million, $100 million of it bought, and from the smartest financial institutions on the planet in the precious metal space. Franklin, Sprott Asset Management, Van Eck, and Merck gave us a $100 million bought deal, no warrants. Get it ready
during that regime.
regime.
Talk to us now about you'll have valuable insights for our audience
100%.
About the new regime.
And that's where I was kind of going. So what he did, but it's important, he slowed us down. He didn't stop us. Now, we weren't ready to build until now. Claudia Scheinbaum has been fantastic. She came in on October 1st, pro-business, pro-mining. Everything she has done has been that message to us. She has hired a very capitalist government, from economy to mining to environment, leading those different ministries, and we have been in a dialogue as mining companies in Canada with her and her government since she took office. We never talked to AMLO.
Really?
We never talked to his government. It was almost a freeze. So what we see right now, and what we have been told and what we are seeing, and we are communicating with the powers that be in Mexico, is that permit issuances are imminent. And when I say imminent, I don't mean just for underground, I mean for open pit. And that's going to be the re-rating we've all been waiting for.
Yeah.
You ask me, I can't tell you exactly when. I think I know the companies that are going to. I shouldn't share any of that. It's just because we've done some work. But I am preparing to have and we already have an underground permit for the underground mine. I'm amending it to include the open pit.
Okay.
I would expect, on timing, that I would be very surprised if I'm not making a build decision in the first half of this year. So you can read into what you think when I'm going to get my permit. Very soon.
Let's talk a bit about the economics of the open pit, which are remarkable.
Yeah.
And the staged aspect of where it is in relation to underground.
So all those projects we've built in the past are that flowering epithermal, and it's really simple. Big stockwork at surface. Epigenetic is a word we use because where that silver vein, high-grade silver vein, went to great depth, once it passed through that beautiful plumbing at surface, you get 150 meter blowouts of mineralization, and that's your open pit. And then you use that easier project, lower capex, big cash flow to develop the underground. That's always been a business model. That's every big mine. That's Pinos Altos. You just go Mulatos. They're all the same. Open pit, go underground. So ours is the same. Open pit, PFS came out in October, end of October. We'll build on that PFS. I'll confirm why I know that in a minute. But the economics were incredible.
Yeah.
You've got a 10-year mine life, 86, these are US dollars, 86 million US dollars of investment. Most projects are 500 billion, 86. But what it drives and generates is crazy. Let's use spot prices. Today, spot prices, that study delivers an NPV of over 350 million USD, a payback of 1.5 years. It generates free cash flow in excess of US dollars after tax over the 10 years of $500 million, on average 50 million USD per year. That's more profit than a lot of the big mines make.
Yeah.
So that's incredible. At about a $11, $12 production cost, and all-in sustaining of 13 or 14.
And
low
the
cost producer.
IRR in that.
The IRR is just incredible. At spot prices today, it's over 55%.
Wow.
So I mean, that's why mining
Yeah.
in Mexico open pit was never going away. And the beauty on this is a quick process. This is we have in the study, that's an 18-month build start to finish. You know, we have Francisco Alvarez joined us. I think I should mention him. You got to have someone who can build as an expert. So Francisco joined us over a year ago. When we poached him from Argonaut, he had built all of their big open pit mines over the last 12 years. An expert. He has the mine team, all the management team to go with that. And I think with him there, we're going to be able to shorten that up less than 18 months. You imagine that CapEx 18 months and you're generating that cash flow. It's going to be incredible. And that's step one.
And then the underground.
And so the underground, we're very close on that, because think about that. I got 100 million silver equivalent ounces in that pit ready to go, build it, and it generates those economics. We weren't resting on our laurels. We've drilled underground also. We've already got 113 million silver equivalent ounces drilled off in the underground, which we put out in the updated MRE when we put out the
And what grade?
PFS. What we think will be mining grade, because we have an 800 ton per day underground permit, and that's where we'll start, because that's the right size mill, and we have the mill already on site. That's 31 years of mine life in that ore.
Oh, wow.
So you can understand we're going to go for the higher grade.
Right.
We think, and this is a think, it's going to be a 400 or 500. If we're really lucky, upwards of a half kilo by the time we get that ready to go. Now, what's that ready to go? I love the fact we're back drilling the high grade. And what we did is, instead of drilling 600-meter holes, we've gone underground now.
Yeah.
So we started that in November. We've got the drill rigs underground, and they're turning into the high-grade vein, shale, and sulfide zone. And you're going to see those first high-grade results in February. So it's going to be nice to have the Tigre high-grade back in the market. I think people will like that. But really, why is that? Because we've been working, even though we were working on the PFS for the open pit, Brien, we didn't stop on the underground. So all the metallurgy, all the engineering, it's all done. So we're going to continue to drill here. We're going to put a pin in it at some point, and I'm thinking you're going to see that first PEA, that first economic test, in April of this year. That's only a couple
really?
months.
Really?
Oh yeah,
Okay.
so we're going fast on that, and then I'm gonna just go real fast and turn that into a PFS. And if the whole plan works, permit, build the open pit, basically get that in production in 14 to 18 months, generate the kind of cash flows I talked about, and then you self-fund the underground, because by then I'll have finished the PFS, and we'll probably build that on the
And then
PFS.
self-funding means
Self-funding
no
means
dilution to
no
the
more
shareholders.
dilution after. We got to get the debt. One thing I'm going to say, the thing I have to do is I have to get the 86 million. So on the basis of the PFS, people say, well, do you need a feasibility? No, first 3 years of this are a starter pit, which is at feasibility level, all measured ore,
okay.
zero strip,
So that
high
covers
grade.
your payback is under feasibility.
On a feasibility,
Yeah.
because it's 1.6. Now, that's me saying that. I'm dealing with all the lenders right now. And the big, I won't say who, but the biggest lenders who lend to us. 2 of them on the basis of that PFS have already given me a term sheet.
Oh, wow.
So I'm
Okay.
right.
So you have the steak and potatoes of the near-term,
Absolutely.
quick production, and you're able to give the market the drill results, the dessert that they really want to see.
Absolutely.
Too. So wonderful. It's a great play, like I say, silver offering leverage to gold, silver stocks offering leverage to silver, and a company like this is able to deliver great drill results, a very clear and fairly rapid path to production and cash flow. It's great. I'm so happy to have it in our portfolio. Thank you so much,
Thank you,
Glenn.
Brian. I really appreciate being here. Thank you so much.